All right, testing this thing on. All right, good morning, everybody. Welcome aboard to the morning note. It is 9 a.m. Eastern Standard Time, May 11th, 2022. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thanks for taking the time out of your day to join me this morning and every morning, 9 a.m. Eastern Standard Time here on the YouTube channel. Bottom right-hand corner of your screen, little white logo. Click on that. Turn on notifications. Subscribe to our channel. Like our videos. Really do appreciate it. As always, let's get into the market. The Dow was up higher this morning pre-CPI. CPI was at 830, 202 points down now on the Dow. Excuse me. Nasdaq down about 1.73%, hotter than expected CPI number. We'll get over that here in a second. S&P down about 1%, 39.57 on the future side. Russell down 0.60%, 1749. Crude oil up 3.16% on 102.91. We talked about that last night, kind of like that $100 a barrel oil. I'm still looking for 85 to 90. Gasoline up 1.15%, $3.58 a gallon. Gold is actually down with a hotter than expected CPI number, down 0.17%, 1837 an ounce. Nowhere to hide there. Silver up slightly, 21.45 again. That's with higher inflation reading. Euro dollar is flat, 105.25. Dollar yen is up 28 pips, 130.70. Bitcoin taking a hit, down 30,000, below 30,000 now, 29,145, down 6.83%, and Ethereum down 8.17% at 2164 coin. Taking a look at yields, 3.058. Now remember, we were closing below 3. Not with this CPI reading. Dollar is up marginally, pretty flat, 103.97. The VIX, 34.10. 3.36%. We'll take a look at a VIX here as well. Let's take a look at S&P. I posted the drawdowns on SPY. If you guys want to take a look at that, that's a good place to start taking a look at your levels. 39.41 is my short level for SPY. If we break that down, that's your next support. We already broke down below the lows that we just had for the week. 38.25 is the next target. Really, your big level, if you're looking at it in terms of an S&P trader, is 36.64. That's your 161.8 extension fib. 41.01 was pretty much the low that we had last week. You could always redo that. You could put the Russian invasion lows if you want. It's pretty close. 41.01 was pretty close to the Russian invasion lows, and you could see that extension of 36.64. If we expand it out a little more, you'll get back to pre-COVID levels, right around 33.96. That 200-day moving average would be it. That's still ways above the next support level 2, excuse me. All right, so that's S&P. That's what I'm watching. Let's take a look at Nasdaq together. Nasdaq pretty similar, 10.713. That's your 200-day on Nasdaq. Nearing some heavy support here as well. So keep an eye on Nasdaq for a possible bounce. I know that's very tough to even consider in this market, but we're pretty close to key support on Nasdaq futures on the weekly. We broke down the 100-day moving average. Now you have the 200 at play at 10,713. 11,992 or 12,000 is a key level on that. Let's go and take a look at yields back on the hourly chart. You can see kind of rejecting now as we're getting a little bit of a bounce in equities. We did fill that gap here on TNX. So, hey, not all is lost either. The world hasn't ended. I have traded now. This will be my third slash slowdown, if you think about that. I started the company in 2014. The first real slowdown, remember, was 2016. 2018, the Fed induced slowdown with the rate hike. 2018, 2020 COVID, and now 2022 high inflation environment. So again, I've seen these. I could tell you firsthand as someone has been doing this now almost 8 years with the company, at least my company. The most important thing is that time really is the factor. Time is the real variable. If you have time on your side, you're gonna do okay. If you're the type of person that's very impatient and is very impulsive, you're probably not going to do well on both markets, either down or up market. So again, you kind of have to look at it as a big term view. You can't let May ruin your year either. So it's really a daily market, day to day. If you're an investor, depending on where you are looking at towards the horizon, that's very important to see as well. What's your time horizon when it comes to investing? Let's go and answer some questions here. John says, good morning. Good morning, John. Austin says, thoughts on crypto? Yeah, let me go ahead and show you my crypto portfolio. Here we go. At my peak, I was at 240,000. I did sell one Bitcoin to close on my house. That was back in last April. But other than that, still the same. I mean, I wish I can give you the exact level that I bought in, but it doesn't show me here. This is Coin Tracker. This is not free that I know of. Look, Luna token. I was up 100 something percent. Now I'm 94% on it. Terrible, terrible. It happens. I really didn't put much on it. I only have 26 coins. But again, I don't need the money. If I could be completely honest with you, I don't need to sell right now. So again, I'm willing to just hold on to it. At the end of the day, I want to hold on to it. I want to hold long term. I remember back in 2018 when crypto went down from 19,000 peak to about 3,000. Oh boy, that was a tough one. And that's a bigger drop than we have now. So again, I did break that down in terms of Bitcoin drawdowns as well. If you guys wanted to see that, I'll show you right now. And then we'll go over this inflation data, get back to some questions. I really want to get that inflation data out to you guys. So I did post it on Instagram as well. Let's go ahead and zoom out. You can see here now, we're basically what, 54% drawdown now. Back in 2020, we had a 61% drawdown. So that's nothing new. But the big one I remember was 2018. That was an 83% drawdown. If you guys can see it here, 19,633 the peak, right around 32, 34, 83%. So again, I bought then as well way back in the day. So nothing new if you're a crypto holder. This is the name of the game. If you can't hold long term or you can't handle the swings, you're really in the wrong asset class. Equities are fine if that's the case, or ETFs like index funds. Those are fine. But crypto, man, it is not for everyone. Let me give you that because it is tough to navigate because there's so many swings. Let's go over the CPI number together. Here's the CPI number courtesy of Twitter. We're going to go here to CPI, 0.3%, estimate is 0.2%. Previous was 1.2%. So that was the previous reading in March. So technically slowing if you want to look at it that way, but the estimate did miss. CPI excluding food or energy, that's a CPI core, and that's up 0.6%. That was actually higher than last month. So year over year CPI is 8.3%, but it is better than previous 8.5%. I mean, if you want to look at a silver lining, excluding food and gas year over year, again, too high. So again, look at what's bringing this higher. Gas, used cars, utilities, that's gas. Meats, fish, and eggs up 14%. Obviously transporting it. New cars, 13%. So kind of the big stuff is really anything automobile related. Gasoline, used cars, gas utilities, that sort of thing. I'd be worried if Amazon takes away the 2-day Prime. That's when things are getting really serious. I'm kidding, obviously. No, it's bad out there, obviously. But again, you kind of have to look at it this way. Are we going to just tank immediately, or are we expecting a little bit of bounces here and there? And right now, yeah, lower highs, lower lows. We know where the trend is going. The idea as traders is we're just trying to take opportunities as we go along, really day to day, week to week. If you're an investor, all this is really just adding to the fear and adding more to the actual anxiety out there. But again, if this is an IRA, you're not really worried about it. If this is your trading account, I mean, it's going to suck for a little bit. Saw this in 2020, 2018, 2016 as well. It happens, and I could tell you firsthand that it does pass. It really does. Carmen's asking, good morning, Carlos. So much going on. Thoughts on Coinbase, talking about bankruptcy. Yeah, I asked that question to my CFO yesterday. He's big into crypto, Carmen. I remember that tweet. And he said that Coinbase is going to be fine. That's something that they just have to include in terms and conditions. That's something that's extremely, extremely unlikely. Even banks have to write that down in terms of their stuff. There is no FDIC insurance granted in crypto the way banks do. But again, as I was told from somebody that I do trust, that that's something that they just add in the paperwork, obviously regulation just to add that. But in terms of bankruptcy and stuff, I think we're a little ways from that. Coinbase, take a look at it. That was funny because I was actually talking to the team last week of actually shorting Coinbase. We didn't do it. Premiums are so damn expensive. But yeah, ugly out there. I still own shares. I don't own tons of it, obviously. But again, it's going to run with crypto. It's going to run with that. So remember, this wasn't IPO'd back in 2018 when we had that crypto flush anyways. And they still survived. They were still a growing company. So I'm not really worried about Coinbase as much as people are worried about crypto itself. Thoughts on Apple puts for the week? Let's take a look at it. I did have Apple calls earlier this week. We did get a nice bounce. Look at that on Apple. This is on the hourly after hours. So again, little bounce. Looks like support is right around 152. Break about below 152. Then it gets interesting. You can start taking a look at the 150 puts. But again, they are so damn expensive. But now that CPI is over, we should get a reset in terms of premiums. 157.14 is your resistance, but again, you need to get below 152. What's up with Luna? Is it going to zero? Luna is based on stablecoin. So I'm not really sure in terms of how that works. I can't say I'm the biggest crypto expert. I do own some, but again, I'm not an expert on them. So I'd have to kind of research it a little more, but I do own Luna, and it's down big. Do you think coin gets back to its IPO price? Eventually, yes, I do. I think eventually it will. But again, I'm still bullish crypto long term. So again, I still kind of look back into the times where crypto took the hit. And I remember seeing those text messages from friends who weren't crypto holders, and I was back in 2017 and 2016, and getting, oh, see, I told you it was a scam. I told you it was this. I told you it was that. So you get used to it. I mean, if you're a crypto investor, you're pretty much a pariah in your family or amongst your friends, if anything, you know, oh God, I fucked up. I mean, that's really up to you, exactly how you think. I mean, I'm still up on Bitcoin and Ethereum. Some people are not, but again, not a easy thing to hold when things are down. That's really the issue. Looking at the peak to trough on NQ is looking pretty scary. Yeah, I mean, there's nothing really you could say here in terms of a bear market. It is a bear market. Now, in terms of drawdown, I have to do the actual numbers in terms of drawdown for QQQ. Let's see if I can do that quickly while I have you guys on. And we could start messing with it just slightly in terms of peak to trough. So let's go to a 10-year chart. Actually, let's go to a 3-year. We could start taking a look at some drawdown levels. And here is the most recent drawdown. That'll get us right here to right around 27%, right near key support. If we compare that to the actual COVID deal, 30% in terms of drawdown. If we go back to 2018, end of 2018 to 2019, that peak to trough was 23. I remember that pretty vividly. And we're going to go back a little further. I know it's been a while since we had a nasty drop. So let's take a look at here. This one is a nice drop here in 2016. Take a look at that. Now that I remember was a flash crash. I remember exactly where I was in that day too. I was actually in my old apartment and I was watching this huge flash crash hit. This is 27%. So you could see, unless it was COVID, really 27% seems to be that drawdown level. So, you know, you're going to have some little drops here, 17% or so. If we go back to 2013 or 2012, you could see that we had a drop as well of pretty much right there. That's wrong there. Let me get this out of here. Sometimes you still got to work with this koi fin, excuse me. Let me go ahead and take this out here. My apologies for keeping you watching me mess with this chart. So you could see here. Okay, so I don't have that. I mean, it's just too small. There we go, much better. Let's do this peak to trough here. And again, I'm just doing Qs. And this one was about a 12% drop. So nothing terrible, about a correction. But really the biggest one, man, let me see if I can get this 2011 one here. This will probably give us a little bit more of a, there you go, 16. All right, so if we're looking at it in terms of peak to trough falls, other than 2003.com, we're at 27% drawdown. Back in 2020, obviously with COVID, you can see that we had a 30% drawdown. So unless you think this is worse off than COVID in terms of the Qs, you're pretty much starting to get to close to at least a bottom. So yes, I believe we're closer to a bottom than we are actually to the top or a continuation down. But that's what I have there in terms of drawdowns on Qs. Now, Qs is not exactly Nasdaq composite, which is true. But again, it's very important to see the QQQ as well, since there's so many investors on it. We're getting a little bit of a bounce here. About 15 minutes until open. Let's see, maybe that was the stop run. 39.50 seems to be kind of that support now. We bounced a couple of handles off that. We're going to go pull up the 3-year one more time, and you could start seeing 39.41 as next support, 38.25 as your next. Why are investors so fearful of recession? What's the correlation of recession with the stock market? Stock market is not the economy, so let's kind of keep that in our back pocket, understand that. But when in terms of worrying, what you have here, guys, is a massive repricing. How do you reprice? How do you price a company like a Netflix or a Peloton when we don't have a pandemic anymore? How do you reprice companies in a higher rate environment? How do you reprice tech companies in a higher inflation environment? How do you reprice aggressive growth beta stocks or metaverse companies when interest rates are higher and capital is so hard to come by as money becomes more scarce? So now we are in the big repricing, is what I'm calling it, big repricing of on the S&P, about an 18% sale, if you want to call it, or cut from current prices. Keep in mind, guys, there's no such thing as a bad market. It's just prices fluctuating up and down. This is a sell-off, in my opinion, a big repricing based on the current macroeconomic outlook. Again, a 3% 10-year with fair value of S&P 17% is right around where we are now, right around 4,100. That seems to be fair value. If we are at a 3% 10-year, where are we going to be at a 10-year? Can we get to 5%? If we're at a 5% 10-year, then you got to reprice those multiples. Remember, guys, there's a difference between profit and inflation-adjusted profit. Big difference. That's where we're getting a huge repricing. But I want to see the market action today. I want to see how we close today. I want to see this reaction actually when we get some more volume into the market. I want to see if we actually get as high volume as we got on Friday. That's when we had the last terms of economic data, which was NFP. We're back Monday and Tuesday. We're pretty slow in volume. I want to see if we get that spike. Not tons after CPI. So really low volume, really low liquidity, not the best. It seems to be just melting down here and there, not spikes. Could we get a spike? Sure. But again, if we're kind of matching that same volume up Tuesday and Monday, it seems that we're going to be stuck in this range of 39.50 to 41.01 for now. Could that break? Let's see and take advantage. Have a great rest of your morning, guys. We'll catch you guys later for the aftermarket recap at 5 p.m. Eastern Standard Time. We'll catch you guys soon. 10-year yields did fill that gap. So keep in mind, maybe get a little bit of bounce. Cheers.